In terms of politics, Mexico has a strong democratic background. The Institutional Revolutionary Party, currently in power, have outlined a 95 reform plan to improve business conditions. Mexico is the world's 15th largest economy, with a GDP of $1.261 trillion in 2013. The GDP in Mexico is now growing at a steady rate, with relatively low inflation of around 4%. Mexico has free trade agreements which help to attract foreign direct investment. However, high income inequality and drug violence lead to levels of instability in the economy. Mexico also imports 94% of technology, making them largely reliant on other countries. With a 48-hour working limit and a minimum wage of 70 pesos per day, Mexico is seeing the emergence of a new middle class. Despite adverse climate and risk of earthquakes and other natural disasters, renewable energy presents an abundant asset in Mexico. The Mexican healthcare sector stands out as particularly dynamic. Indeed, it's been steadily growing and performing well these past years despite the recession. This can partially be explained by an arising phenomenon called medical tourism, in which Americans looking for cheaper healthcare travel to Mexico. For a small decrease in quality, they can get a high decrease in the price of treatment. This trend is barely affected by fluctuations of the economy, as people will always need surgery and will seek lower prices as long as the quality remains above a certain level. Medicasur, one of the largest Mexican healthcare providers, seeks to fully exploit this trend and all the growth opportunities it represents. In addition, it's one of the only large companies to be listed on the stock exchange, making it ideal for investment. The automotive industry in Mexico has projected strong growth patterns in recent years, making it an attractive sector to invest in. Low labour costs, highly skilled labour, and proximity to the US all add up to advantages of investing. During the US financial crisis of 2008, the market value of the industry fell sharply. However, the sector is recovering and several MNCs have planned further investments in Mexico. General Motors and their Mexican subsidiary have a 20.3% market share, and their continued development in the sector and local areas highlights how foreign investment is ensuring sustainable prosperity for the automotive sector, as well as positively impacting Mexican lives. The Mexican construction sector was adversely affected by the recent financial crisis, which caused a slowdown in the demand for housing and infrastructure projects globally. However, several macroeconomic factors and trends give the construction sector positive prospects. Cheap labour, in combination with productivity improvements in manufacturing processes and falling energy prices, are all factors which will significantly benefit the Mexican construction sector going forward. Also, the housing market in Mexico has started to recover, and many infrastructure projects are being planned by the government. Cemex, a market leader in the construction sector, producing cement, is bound to profit from this development and should prove as a good investment if the Mexican growth picks up. The soft drinks manufacturing industry has been recently affected by government tax implementations on sugary beverages. The bottle packaging industry, despite its dependence on the soft drinks, is however still forecast to have one of the highest growth rates in North America in the future. This is due to a recent increase in bottling efficiency output and new measures to widen soft drink portfolios. Coca-Cola FEMSA, the world's largest franchise bottler, has started expanding into new beverage categories, which have shown promising growth opportunities and represents an example of a company profiting from investment in this beverage sector in Mexico. We have chosen the following ratios for investment. The healthcare sector is particularly promising as it has high expected growth and benefits from the rise of medical tourism, which seems to present low risk. Indeed, our analysis of Medicasur shows that it's barely correlated with the Mexican market, which can help to reduce the overall risk of our portfolio. Secondly, the automobile sector is also experiencing high growth and benefits from important MNC investments. However, these have a strong negative impact on a firm's current financials, as observable with General Motors. This should change in the long run and prove to be a profitable investment. However, it bears a moderately high risk and should be compensated for with investment in healthcare. Thirdly, the beverage sector highly benefits from the shown macroeconomic factors. In addition, Coca-Cola FEMSA's low beta and positive EPS growth forecasts show it as an interesting sector with moderate risk. Finally, the manufacturing sector seems promising as it largely benefits from the macroeconomic factors shown, in addition to many infrastructure products made by the government. However, Cemex's financials show that the sector is currently underperforming. Despite this situation, the high increase in net income growth gives a positive forecast for long-term investment, though bearing a higher risk. Therefore, it only represents 15% of our portfolio. The fund proposed by us is well diversified, showing good investor returns. However, for analysis, specific company betas have been used rather than industry betas, which makes the analysis slightly arbitrary. Apart from the sectors mentioned in our report, aerospace, renewable, banking and telecommunication industries have also shown strong growth in Mexico. The limitations suffered by the fund include the exposure of Mexico to the US's economic variations. Their GDP contracted by 6.6% during the US financial crisis of 2008. As well as this, drug violence has played a major role in investor uncertainty. Nevertheless, compared to other economies, Mexico has shown stable growth and its GDP is expected to expand over the coming years.